Alright, let's talk about passive income. You hear this term thrown around a lot. Many people think it means getting rich quickly. They imagine money just appearing with no effort. That's not quite right. Passive income is money earned with minimal active effort. The key word here is minimal. It's not no effort at all. You usually put in a lot of work up front, or you invest a significant amount of money. Then the income starts flowing more or less on its own. It's different from your regular job. That's active income. You trade your time for money. If you stop working, the money stops. Passive income keeps working for you. So, why is passive income such a big deal? It's about freedom. It's about owning your time. Think about it, if your passive income covers your living expenses, you are financially free. You can choose to work or not, you can pursue hobbies, travel, or spend more time with family. Active income ties you down. You have to show up, you have to perform. Passive income streams, once established, give you options. They provide security. They allow you to build wealth beyond what a typical salary can offer. This is the path to truly controlling your financial future. It's a game changer. Now let me be clear, building passive income takes serious effort initially. It's not a magic button. You might spend months or even years setting things up. This could mean saving diligently to buy a rental property. It could mean spending hundreds of hours creating an online course. It could mean carefully researching and investing in dividend stocks. The passive part comes later. The upfront work is very active. But it's intelligent work. It's work that builds an asset that will pay you back many times over. So, forget the idea of easy money. Think of it as smart money. I'm a huge believer in passive income. It's been a cornerstone of my own financial journey. I've seen firsthand how it can transform your life. It allowed me to step away from traditional employment. It gave me the flexibility to pursue projects I'm passionate about. This essay is about showing you how to build your own passive income pipeline. We're not talking about chump change. We're aiming for $1 million pipeline. It's achievable, it takes strategy, discipline, and the right mindset. So, stick with me. Let's break down how you can make this happen. To build $1 million passive income pipeline, your mindset has to change. Most people operate with an employee mindset. You work your hours, you get your paycheck. There's nothing wrong with that. But to build serious passive wealth, you need an investor or owner mindset. This means thinking long-term. It means looking for opportunities to make your money work for you. Instead of just trading time for dollars, you start thinking about assets. How can you acquire or create assets that generate income? This shift is fundamental. It's the first step towards breaking free from the traditional income cycle. Overcoming the fear of risk is another huge part of this mindset shift. Many people are terrified of losing money, so they stick to safe options like savings accounts. But true wealth generation often involves calculated risks. Notice I said calculated. I'm not talking about gambling, I'm talking about understanding potential downsides. It's about educating yourself, it's about diversifying. Leverage is another concept you need to embrace. This could be financial leverage, like using a mortgage to buy property, or it could be leveraging other people's time or expertise. Smart use of leverage can accelerate your passive income growth significantly. Delayed gratification is absolutely essential. This is a tough one for many. We live in a world of instant everything. But building substantial passive income takes time. You might need to sacrifice some comforts today for much greater rewards tomorrow. This means saving aggressively. It means reinvesting your early passive income instead of spending it. Think about the power of compounding. It's not just for investments. Your income streams can compound too. Each new stream can help fund the next one. This discipline, this patience, will pay off massively in the long run. It's about playing the long game for big wins. Finally, visualize your goals. What would $1 million passive income pipeline mean for you? How would it change your daily life, your stress levels, your opportunities? Having a clear vision keeps you motivated. It helps you push through the hard work up front. It reminds you why you're making those sacrifices. Building this kind of income isn't just about the money. It's about the life it enables. It's about freedom, security, and the ability to make a bigger impact. Keep that vision strong. Let it fuel your actions. This mindset is your foundation for success. Let's get one thing straight. Finance, especially when you're building wealth, is a people business. You might think it's all about numbers and charts. Those are important, for sure. But the best opportunities often come from connections. The right conversation with the right person can unlock doors you didn't even know existed. This is especially true for passive income ventures. Whether it's real estate, private equity, or even finding collaborators for a digital business, your network can provide leads, advice, and partnerships. So, don't underestimate the power of who you know. It's a massive advantage. Access to information is another huge benefit of a strong network. People talk, they share insights, they discuss deals. Being connected means you hear about things early. You might learn about an off-market real estate deal before it hits the public. You could get insights into emerging market trends that can inform your investments. Mentorship is also a powerful aspect. Learning from someone who has already achieved what you want to achieve is invaluable. A good mentor can help you avoid costly mistakes. They can guide your strategy. This kind of information rarely comes from a textbook. It comes from relationships. Building trust and credibility is paramount. People do business with those they know, like, and trust. Your network isn't just a list of contacts. It's a web of relationships built on mutual respect and value. As you become known for your integrity and expertise, more opportunities will flow your way. People will want to partner with you. They'll bring you deals. They'll recommend you to others. There's a saying, your network is your net worth. In many ways, this is absolutely true. A strong, trustworthy network is a priceless asset in the world of finance and passive income. So how does this directly fuel your passive income pipeline? Let's say you're into real estate. Your network can help you find reliable contractors. It can connect you with great tenants. It can alert you to properties with good cash flow potential. If you're investing in businesses, your network might introduce you to promising startups. If you're creating digital products, your network can be your first customers or affiliates. Every connection has the potential to contribute to your income streams, either directly or indirectly. Networking isn't just schmoozing, it's a strategic activity for serious wealth builders. Start taking it seriously. Okay, so we know networking is crucial, but how do you actually build that valuable network? First, identify who you need to connect with. Think about your passive income goals. Are you interested in real estate? Then you need to know agents, brokers, property managers, and other investors. Interested in digital businesses? Connect with marketers, developers, and successful online entrepreneurs. Be strategic. Don't just collect random contacts. Focus on building relationships with people who are aligned with your goals, or people who can offer expertise you lack. Quality over quantity is often the key here. Next, get active in the right places. This means going where these key people are. Industry conferences and local meetups are great for face-to-face interactions. Don't just be a wallflower, introduce yourself, ask questions, listen more than you talk. Online platforms like LinkedIn are also powerful. Join relevant groups, participate in discussions, share your own insights. But remember, be genuine. People can spot a fake a mile away. Your goal is to build real connections, not just to pitch your latest idea. Authenticity will take you much further. The golden rule of networking: provide value first. Don't approach new connections with your hand out. Think about what you can offer them. Can you share a useful article? Can you make an introduction for them? Can you offer a skill or insight that might help them? When you lead with generosity, people are much more receptive. They'll remember you. They'll be more willing to help you in return. This isn't about keeping score. It's about building a reputation as someone who is helpful and resourceful. That's how strong, lasting professional relationships are built. Finally, nurturing relationships is an ongoing process. It's not enough to make a connection and then forget about it. Follow up after you meet someone. Send a quick email or LinkedIn message. Stay in touch periodically. Share relevant information. Congratulate them on their successes. Networking is like gardening. You have to tend to your relationships for them to grow and flourish. It's a long game. The connections you make and nurture today could lead to incredible opportunities years down the line. So, invest the time. It's one of the best investments you can make for your passive income future. Section 5. Building your first pipeline, choosing your vehicle. Now we're getting to the exciting part, choosing how you'll actually build your passive income. There are many vehicles to choose from. Real estate rentals are a classic. You buy a property, rent it out, and collect monthly income. Dividend stocks are another popular option. You buy shares in companies that pay out a portion of their profits to shareholders. Then there are digital products. This could be an ebook, an online course, or stock photos. You create it once and it can sell over and over. You can also build or buy businesses designed to run with minimal ongoing effort from you. Each has its pros and cons. The key is to assess your own situation. How much capital do you have to start? Some options, like real estate, can require significant upfront investment. Others, like creating a simple ebook, might cost very little money but require more time. What are your skills? If you're a great writer, a digital product might be a good fit. If you're handy and good with people, managing a rental could work. Also, consider your risk tolerance. All investments carry some risk, but some, like venture capital, are riskier than others, like established dividend stocks. Be honest with yourself about what you're comfortable with. You don't need a fortune to get started. This is a common misconception. People think they need hundreds of thousands of dollars to build passive income. Not true. You can start small. You could buy a single share of a dividend ETF. You could write a short guide and sell it online for a few dollars. You could start a blog and work towards affiliate income. The important thing is to start. Your first passive income stream might only generate a small amount. That's okay. It's about learning the process. It's about getting that first taste of making money while you're not actively working. That experience itself is incredibly valuable. My advice is to focus on one or two vehicles initially. Don't try to do everything at once. It's easy to get excited by all the possibilities, but spreading yourself too thin is a recipe for failure. Pick one area that aligns with your capital, skills, and interests. Learn everything you can about it. Work on mastering that one stream. Once it's generating consistent income and running smoothly, then you can think about adding another. This focused approach will help you build a strong foundation. It increases your chances of success, and it makes the whole process less overwhelming. Slow and steady often wins this race. Section 6. Automation Station. Making your money work while you sleep. The true magic of passive income lies in automation. This is what separates it from active income. Your goal is to create systems that generate revenue with minimal ongoing intervention from you. This means leveraging technology, processes, and sometimes other people's efforts. If you have to constantly tinker with something for it to make money, it's not truly passive, it's just another job. So from the very beginning, think about how you can automate your chosen income stream. This is critical for scaling and for achieving that money while you sleep dream. It's all about working smart. Let's look at automating investments. This is one of the easiest areas to automate. If you're investing in stocks or ETFs, you can use robo-advisors. These platforms automatically manage your portfolio based on your risk tolerance. For dividend stocks, enroll in dividend reinvestment plans or DRIPs. This automatically uses your dividends to buy more shares, compounding your investment without you lifting a finger. Many brokerage accounts also offer auto-invest features. You can set up regular contributions from your bank account. This set-it-and-forget-it approach is perfect for long-term wealth building. Technology makes this incredibly simple today. For business-related passive income, automation is also key. If you're selling digital products, use software for your sales funnel. This includes email marketing automation, payment processing, and product delivery. Customers can find your product, buy it, and receive it, all without you being directly involved in each transaction. If you have an online business, tools can automate social media posting, customer service responses, like chatbots for common questions, and even ad campaigns. For real estate, hiring a good property manager is a form of automation. They handle tenant issues, rent collection, and maintenance. This frees up your time significantly. The ultimate aim is to reduce your active involvement to a minimum. This doesn't mean you never check in. You'll still need to monitor performance. You'll make strategic decisions. You might need to update your digital product or review your property manager's reports. But the day-to-day operations should largely run themselves. This is the difference between being a business operator and a business owner, or a property manager versus a property investor. Automation allows you to step back. It allows your systems to do the heavy lifting. This is how you truly reclaim your time and build scalable passive income. Section 7. Real-life riches, examples of thriving passive income pipelines. Let's look at some real-life examples of successful passive income pipelines. Real estate rentals are a very common one. Imagine buying a duplex. You live in one unit and you rent out the other. The rental income from the second unit could cover a large portion or even all of your mortgage. That's a powerful strategy called house hacking. As you build equity and save more, you can buy another property solely for rental. Hire a property manager. Now you have tenants paying down your mortgage and providing you with monthly cash flow. This can be scaled up by acquiring more properties over time. It's a proven path. Dividend investing is another fantastic example. Consider someone who consistently invests in a portfolio of dividend aristocrats. These are well-established companies with a long history of increasing their dividend payouts. They set up DRIPs, so all dividends are automatically reinvested to buy more shares. Over years or decades, this portfolio grows. The dividend income also grows. Eventually, that dividend income can become substantial. It can be enough to cover living expenses. This strategy is relatively hands-off once set up. It requires patience and consistent investment, but the passive cash flow can be very reliable. Creating and selling digital products is a newer but very effective pipeline. Think about an expert in a specific niche. Maybe it's fitness, cooking, or software skills. They create a high-quality online course or an in-depth ebook. They set up an automated sales funnel. This includes a website, online ads, and email marketing. People find the product online, purchase it, and get instant access. The creator did the work once to create the product. Now, it can sell hundreds or thousands of copies with minimal ongoing effort. This is the beauty of digital leverage. The potential scale is enormous. Affiliate marketing is another popular route, especially for content creators. Imagine someone with a YouTube channel or a blog. They review products or services they genuinely use and like. In their content, they include special affiliate links. When a viewer or reader clicks that link and makes a purchase, the creator earns a commission. This doesn't cost the buyer anything extra. Once the content is created and published, it can generate commissions passively for months or even years. The key here is building an audience and providing valuable, trustworthy content. It takes time to build, but the passive rewards can be significant. Section 8. Scaling up from trickle to torrent. Once your first passive income stream is established and running smoothly, it's time to think bigger. It's time to scale up. The most powerful way to do this is by reinvesting your profits. That initial trickle of passive income, don't spend it. Use it to fuel more passive income. If your rental property is generating a few $100s a month in positive cash flow, save that money. Combine it with other savings. Use it as a down payment on your next rental property. If your dividend stocks are paying out, reinvest those dividends. This creates a snowball effect. Your passive income starts to generate its own passive income. This is how wealth truly accelerates. Leverage your success. Once you have a proven track record, even a small one, doors start to open. Lenders might be more willing to give you better terms for your next property. Potential partners might be more interested in working with you. If your first digital product was successful, you have an existing audience for your next one. Use your initial successes as a stepping stone. Your credibility grows with each successful venture. This allows you to access better deals. It allows you to attract more capital if needed. Success breeds more success, especially in the world of passive income. Don't be afraid to showcase what you've achieved. Diversification becomes more important as you scale. While focus is key when starting, you don't want all your eggs in one basket long term. If all your passive income comes from one rental property, what happens if you have a long vacancy or a major repair? By diversifying, you spread your risk. Once your real estate income is solid, maybe you start building a dividend portfolio, or you explore creating a digital product. The goal is to have multiple streams of passive income from different sources. If one stream slows down temporarily, the others can keep you afloat. This creates more stability and resilience in your overall pipeline. As your passive income empire grows, you might need to build a small team. This doesn't mean you're creating another active job for yourself. It means strategically delegating tasks that can be handled by others. You might hire a virtual assistant to manage customer service for your online courses. You might work with a bookkeeper to handle the finances for your rental properties. The key is that these people are part of your automated system. You manage the system, not the day-to-day tasks. This allows you to scale far beyond what you could manage on your own. It keeps the income passive from your perspective. Section 9. The long game: maintaining and growing your million-dollar pipeline. Building a million-dollar passive income pipeline is an incredible achievement, but the work doesn't stop entirely once you hit that milestone. Passive doesn't mean set it and forget it forever. You need to regularly review and adjust your strategy. Markets change, regulations change. What worked 5 years ago might not be optimal today. Schedule periodic check-ins for each of your income streams. Are your rental properties still performing well? Are your dividend stocks still in strong companies? Is your digital product still relevant? This ongoing oversight ensures your pipeline remains healthy and productive. Continuous learning is crucial. The world of finance and investment is always evolving. New opportunities emerge. New tools become available. Stay curious. Read books and articles. Follow industry news. Attend webinars or conferences if they are relevant. The more you know, the better decisions you can make about maintaining and growing your income streams. This doesn't mean you need to become an expert in everything, but a good general understanding of financial trends and strategies will serve you well. Lifelong learning is a hallmark of successful investors. Protecting your assets is also a key part of the long game. As your passive income grows, so does your net worth. You need to think about mitigating risks. This includes having adequate insurance for your properties. It might involve setting up legal structures like LLCs to protect your personal assets from business liabilities. Consult with legal and financial professionals to ensure you have the right protections in place. It's not the most exciting part of passive income, but it's essential for preserving the wealth you've worked so hard to build. Don't neglect this aspect. It's about safeguarding your future. Ultimately, $1 million passive income pipeline is about more than just money. It's about achieving true financial independence. It's about having the freedom to live life on your own terms. It can provide security for your family. It can allow you to pursue your passions without worrying about a paycheck. You can even build a legacy to pass on to future generations. So enjoy the fruits of your labor. You've earned it. But also remember the principles that got you here. Smart work, discipline, and a long-term perspective. Keep applying them, and your pipeline will continue to flow for years to come.